Jeff, very good to see you. I want to talk about the recent market volatility. Concerns about a cooling U.S. economy led to a market rout recently, with the Dow down as many as 1,100 points in early trading. Stocks and treasury yields did pair some declines after service sector data came in better than expected. So market volatility and market corrections are, of course, to be expected. But I want to talk through the volatility that we did see as we take a look at the S&P's performance this past week. I mean, it's tough, Jeff, when we see this much red on the board.
That's right. I love this website, finvez.com. It's a great website
Yeah.
that shows the S&P 500. And the S&P 500 is it's market capitalized is how it's allocated. And so larger companies, which are mostly tech companies, are the ones that are going to have the biggest impact. And so they got hit pretty roughly just in the last week when the inflation or the unemployment numbers came out, which raised the risk of a recession, and it caused all kinds of turmoil in the markets, along with Japan's issues where they raised interest rates. So last week was tough, but if you look at the overall year to date, you see a lot of green. And so they gave up some of the returns that we've had for the whole year, but overall the S&P 500 has done tremendously well.
I'm glad you brought up those tech stocks because it has been a good year for the market overall, but when those tech stocks take a hit, so does the S&P. And this is because of something we've talked about before called concentration risk, where 82% of the market movement is because of these 10 stocks alone.
Yeah, these large companies, Tesla, NVIDIA, Google, Apple, Amazon, all these companies, mostly tech stocks, are going to drive the market because of their large capitalization that they have. And so you have to take the good and the bad, which is another reason to not be fully invested in just these types of tech stocks. You're going to get hit badly, and it's important to have a diversified portfolio.
Exactly. And the S&P is not a well-diversified portfolio. So if somebody has had a well-diversified portfolio, how have they been this past week?
Well, bonds have done exactly what they're supposed to do. They offset market losses and offset market volatility. And other alternative types of assets, including commodities, annuities, and such, also have that effect. They help to diversify further with your portfolios. And people that are close to retirement or in retirement, that's exactly what we need. We need to be able to cushion and have a more predictable portfolio strategy.
Right. So just to show you something a little bit funny, Jeff, on Friday, I plugged in on Google, should I? And the first option on the drop-down menu was sell my stocks right now. So clearly people are feeling anxious, but what should we be keeping in mind?
Well, it's important, again, to have a long-term perspective when you're investing in the stock market. And a short-term market drop is just a blip on the radar for long-term investors. That's why it's important to have a plan with your long-term strategy for your investments. Emotions dictate just the opposite. Emotional decisions are the worst financial decisions that you can make, and they can cost you a lot of money. You're taught to buy low and sell high is what we're told to do, but emotions would sabotage that. So that's why it's important to have a plan and disciplines within your strategies.
Right, because if we had sold on Friday, we would have locked in our losses.
Absolutely, absolutely. It's not a loss until you sell. And so people that took the emotional train there, they got hurt badly. And it takes a long time to recover when you're selling at just the wrong time.
Really good point. So, Jeff, if somebody would like to work with you to create that financial plan so that we don't feel these knee-jerk reactions to react emotionally, how can they reach you?
Sure. They can reach us at our phone number, 405-681-9633. Take a look at our website also, gortonfinancial.com, and they can email me directly, jeff@gortonfinancial.com.
Great. Jeff, thanks so much for your time today.
All right. Thank you, Erin.